What is up, my beautiful and lovely people? Welcome back to another trade recap video where I'm going to be going over my trade that I took from Asia session in Tuesday's range. And Tuesday's just coming to an end right now. It's 12 p.m. for me. Market closes at 2 p.m. in my time, which is in 2 hours. And today I just secured a smaller little 500 little something. You know, it ain't much, but it's honest work. It's obviously NFP week. I didn't want to go heavy on the risk when I was not really confident in the direction. So you guys, for those of you who have watched my first Monday's trade recap, it was kind of going into that big expansion that happened. I was saying I'm not confident until it leaves the range, and so it did actually leave the range after that trade recap that I did. And it left the range, expanded, and came down into this daily IFVG. Now, my positions, the one that made me to the $500, were sells from the top of this daily range. And this was after I got some confirmation, and I was selling with the narrative that not only is it likely to expand down to the daily IFVG, but I didn't think it was actually going to hold. And why did I not think that it was going to hold? That comes down to a lot of factors. The first one starts off with this big expansion. That was an unusual expansion. It's not something that we get all the time. So when I see this kind of expansion, these big moves, even on the lower time frame, sometimes there's just candles that just gap up like crazy. Whenever you see that, market typically likes to correct it. And so coming into it, it's just my experience speaking to me there, where I was we have to be careful here. Even though this is a bullish confluence, we have to be careful to buy from it because the market did a very unusual move here. And most of the time, I've experienced that it tends to correct that big move. So right off the bat, I was like, it's likely going to correct this. I'm not going to expect it to hold, but if it does, it'll be clear towards the end of the day. So now that it's approaching the end of the day, it's clear that we're holding at this level, and the next daily candle can technically expand towards buy side. It can happen, and I'll be ready to execute if that does happen. But I wasn't expecting that for the sells, and that's why I was able to hold it a little longer and even close some of my positions down here. So I flipped my little $250 to 770, and I withdrew 525. Left another 250 in the account. So I'm pretty happy with that because it was early into the week, and I caught a little sell that I didn't expect I was going to catch, especially after this big move. And now going into the rest of the week, I'm going to be kind of reserved. I'm going to be reserved in the sense that I don't know if it's going to hold or if it's going to try to run down, because there's going to be a new fair value gap that forms here. So typically if there's a IFVG but it leaves a fair value gap right here, it could have immediately rebalanced this one and prevented a new fair value gap from forming if it really wanted to go up. But the fact that it didn't, and it left this little gap right here, so once this daily candle closes, there's going to be a gap right here, a fair value gap. Therefore, it might want to use it to go lower, you know? If it ran just a little bit lower, corrected this, prevented a fair value gap from forming, then I wouldn't have been looking for this. But everything's kind of supporting it, including the seasonal narrative, which would be number 2. Number 2 was seasonal tendency is bearish for the month of June. And we also didn't get the month that we expected on May, where it should have been much more bullish than the last 2 months. And the fact that we didn't get it and then expanded like crazy towards buy side kind of just tells me that we were creating a wick on this monthly candle right here, and now we're likely to expand towards sell side. That's what I'm expecting, and I feel like this month is going to be a big bearish month. And now all I have to do is really kind of react to it, adapt, to see if we do end up holding and there might be some buys here, maybe we run up to this high, I'll be willing to take those trades. But I'm going to require my model to form so that I can actually execute off of the model, not just going in off of daily bias, because the daily bias, while it does say that it's bullish, it's not exactly clear because the monthly is much more significant. And if the monthly is bearish, it doesn't matter if there's a bullish daily confluence. It's going to melt down anyways. So what I'm going to be keeping my eyes on is right here, this fair value gap that forms once this daily candle closes. So once that happens, that's what I'm looking for. That's what I'm going to be reacting to, adapting to. As for the sells, let me break down why I actually went in for those sells. It was down to the 1 hour time frame. As normal, the daily candle expands or opens up Oh, I think my subscription ran out. I'm gonna have to start that up again. Okay, so as usual, the daily candle opens. So here we have Monday's candle, and once that closed right here, Tuesday, I don't think this is correct. Technically, this says Tuesday starting from 12 a.m., but it starts after the open. So once New York session closes at around 6. So right here, the new daily candle opened and it created the wick already. So you can see that this wick right here was on this current daily candle. So once this happens, this is typically what I look for my model. And once this typically happens, this is the wick happening. And if it wants to go down, then what I do is I look for a move inside of the leg that created the wick, and I use it as an IFEG. And in this case, we had a 1 hour one closed. Excuse me. In this case, we had a 1 hour FEG that was flipped into an IFEG, and once market came and tapped back into it, I got into my positions right here with like literally 0.10 was my total position, and I held that down, and that was like an additional like 400 or something. So I was really happy with that. It was actually more than that. I had like 0.25 here, and then I closed that one a little earlier, and then I held the partials down to here. So that was my trade, and this was my entry criteria. It's my typical Asia session breaker model where we have this big move up. You use the IFEG in the move that ran up and created this wick, and you target whatever the draw on liquidity for the day is. Like, you're basically thinking about, where is this daily candle going to expand to? Where does it want to close? And it's very clear in a day like this, whenever we have a really close daily inefficiency, it's clear that it wants to close inside of the daily IFEG. So that's all that we aim for. And that's how you get like this super high probability like accuracy. Like, my higher time frame is super accurate. And yeah, that was the trade that I took. It was very simple. And I hope you guys learned something from this trade recap, and what to expect for the rest of the week. I'll catch you guys later. Peace out.